Hello, everybody. This is True Demon, the Devil's Stockbroker, and I'm coming to bring a closing day update on Progenity, talk about some news that's going on with me, and just kind of give a recap on my thoughts of where we're currently at. So, it wasn't a good day. I'm pretty sure that everybody feels that way, and it's really no surprise. So, that's all right. It's understandable to be upset. Um, I'll I'll start by saying that I'm still bullish overall on the stock. It's just that psychologically, it really hurts to see red this many days in a row. The stock actually fell from a little over 65 percent from its all-time high, or recent high, I should say, at 620, down to this lower band of support at 230. Um, that is the deepest bottom that I had predicted for this stock to come for it to come down to, and I use this as a buying opportunity to accumulate more shares. Um, I have continued to trade a few calls in this for the long term. Most of them are at least into January, but most of them are much further out. With there being leaps, the reason for that is because there's a lot more upside for Progenity for the long term, not like long term in the eyes of most Reddit retail traders. Um, I'm looking at this as a retirement investment personally, but for those that were in this for a squeeze, you will be happy to know that shorts. The reason for all of this selling is because shorts piled back in. So let's kind of cover a little bit of that. So moving on to Progenity's short interest on Ortex. We've got a little bit of selling pressure coming from the short side. Security lending volume is still moving pretty high. We're now kind of peaking at the median levels that we had back on October, early October, that week of the initial dilution that we had seen. That's not a particular indication of anything. It's just telling us that the volume of shorts continues to be extremely high as compared to when we first started this play all the way back down here in early August. So, with a couple of other additional metrics, we saw that utilization took a sharp dip here and then returned almost immediately. That's almost certainly from recent shorts getting out of their positions and then retaking positions. And it's easy to see with the drop in the average and the rise in the number of loans that shorts are now coming in with fresh loans. There are still actually a significant number of shorts that are in for an extremely long period of time on average, 18 and a half days, as a matter of fact. So, even with the recent drop, with shorts covering as we fell down from those highs, I suspect that many shorts actually got forced out and squeezed out as we hit those highs, and that this reporting data is delayed. But as was mentioned before, a lot of shorts took heavy losses as they got into their initial positions sub $1.50. So when we consider how far we had come, it's not really it's not an understatement to say that they got slaughtered. At the moment, it's our turn, and right now there's a lot of bearish divergence, but it looks like we're getting ready to turn around and swing back to the upside coming here in into next week. So going back to Weeble, one of the things that I have been pointing out frequently is that our volume level has been the lowest that it's been consistently since this play started to really take off. One of the market mechanics that I've frequently pointed out is that during low volume periods, it's extremely easy to push the stock down because there's not many limit orders that are bidding um, for stop losses or bidding at buys. or rather, I should say that there are a lot of stop loss orders that are on the that are sitting on the order books, and then there are not as many bid orders looking for limit buys. So if we look at the order book, we can see that there's a imbalance. We look at this. We look at this wall here, and we see at about a $2.20 level is when the level of shares picks up. Now this is after hours, and we can't see back in. We cannot look in real time back at what was going on during the day, but I was kind of paying attention to the order book, and there was just not a lot of bid orders on the books. So because of that, um, algorithms are able to continuously attack each price on the bid during periods where they are during periods when there's very little volume, and consistently this will force the price down. And then of course what that ends up doing is that triggers stop losses. We call this stop loss hunting. Um, because the stop loss orders are still sitting on the order books, and because market makers have access to those books, they can see those sitting there waiting to be triggered. And if they see an opportunity where the limit orders start to relax, like say if there was originally a wall that was at about 10,000 shares of buying, just buyers waiting to pick up shares at this $2.35 price, but then they see at $2.33 that there's a ton of stop losses just waiting at that price, and that's what somebody's risk tolerance is. Then what they'll do is they'll buy up all of these orders, and then they'll buy up the next orders that cause it to surpass this entire this price level, and they'll set a bid. They'll set a bid at a market order to pick up the shares at this price. So by doing so, they skip down by a significant, like they'll drop it by 5 cents, and then they'll pick up shares at a 4 cent discount, something like that. I'm just kind of illustrating with arbitrary numbers. It's not exact. Some of these transactions happen with only a difference of uh, like a fraction of a penny, but that's how algorithms trade, and they're extremely fast, and they're paying attention to all of these numbers, and they're able to factor them in a way that humans can't possibly compete with. So for us, we just see the price falling, and when algorithms are doing it, they're seeing, okay, I see somebody wants to buy these shares at this price, but if I can get through them, if I can sell them all of my enough shares, then I can drop the price down to this level, and I can get 10 times as many shares for a 1 cent discount. And that's how algorithms look at this sort of thing. So it's just one way to consider how these types of high frequency trades work, and it's the reason why we see ridiculous amounts of volume on good or bad days. But on particularly bad days, you can really see a lot of downside movement going on. And that's just because there's not a lot of competition moving the stock in a particular direction. So if there's not much volume, then just one entity with enough funds to push the price around can do extremely well. So as I stated before, that's pretty much what's going on here. Now, how can we detect that? We can actually detect it with this OBV indicator. So I've talked about OBV a few times on stream, and I want to take the time to explain it here. OBV is extremely useful for spotting when an algorithm is moving the price to the downside or the upside, but particularly here you can really see it very clearly that there's a ton of upside potential to this stock. So first, what's on balance volume, or OBV? On balance volume is basically the sum of the red and green candles. The way that it works is when there's a green candle from the price rising, it results in a green volume bar, and hence there's more buying versus selling. So with a green volume bar or a green volume candle, you add that to the OBV indicator. And then when there's a red candle from the price going down, then there's more selling pressure than buying pressure, and that causes it to be subtracted from the OBV. So what happens in most stocks? Because we see this interesting plateau that's going on with OBV on Progenity, and we can see it in a lot of other stocks. But let's take a look at a stock like Microsoft and see what actually is taking place on this one. So if we look back at the history of Microsoft, we can see the OBV kind of trends along with the price, and it moves in almost in tandem with it. It's not perfectly volatile, like it's not as pronounced. It doesn't move as drastically, but it does keep its shape with the price action. And the reason is because during buying and selling, the volume candles tend to balance out. When a perfectly balanced stock is being traded, the OBV will match exactly with the price action, uh, tick by tick. Because when you're buying more shares, that's causing upward pressure, and when you're selling, that's causing downward pressure. So on a perfectly normal traded stock, you can have these huge swings, but because the volume is balancing out in either direction, the OBV trends with it almost perfectly. Now, what happens if we have another situation where somebody is doing what we described before as stop loss hunting, or just trying to push the price down and manipulating the price action in order to create a psychological response? Well, we can look at Progenity for that. So in the case when we see there's a ton of downward pressure on the price, but there's not much volume as we see here, then the OBV stays very high. It just kind of plateaus and then stays flat. So what happened with Progenity's stock is here we had a very natural movement. The price was rising, buyers came in, it peaked here, and then suddenly it started to sell off. And this was because of a dilution event. So this had a very pronounced effect on the stock. It met some new highs, and then dilution announcement came. It got shorted at the top, and then a bunch of retailers that ended up getting stuck in those positions uh, got scared, and then they exited their positions. And the OBV followed the peak and then sold off almost immediately. And the OBV kind of just tracks with that. But now we have a different situation here where it's just sloping upward with the price. And that's also natural movement. We have a perfectly natural climb in the OBV that's trending pretty close with the price action. But now we have this long downtrend, and the OBV is hardly moved in this case. And the reason for that is because these algorithms are starting to push the price down by attacking anybody that has a limit order or a stop loss order and forcing that exchange of shares because of what's able to be looked up by the algorithm on the order book. Now you can see the most pronounced effect of it here on this very short time frame. Let's compare the price action here. So the OBV here at the peak at our highest price was $6.20. And the OBV is at roughly 2.09 billion shares on balance. If we were to compare this price to this price, we see a difference of just a little over 180 million. I'm sorry, 111 million shares difference, selling from 620 all the way down to 227. Now that's a drastic move. If this was natural selling, the volume would tend to be much higher, and the sell-off would have been drastically more pronounced, and the OBV would have come down. If this was just selling because of institutions that were holding onto shares suddenly dumping their positions, then the OBV would bottom out. We would see the price and the OBV kind of mirroring each other. But we don't see that here. Let's take a look at another stock that actually is doing this exact same thing. Let's look at AMC. Look at AMC. It's done this twice. Here's the first plateau that took place, and let's compare this on a much longer time frame. So this is when I was in AMC at the beginning. I'm still in AMC now, I should clarify, but this is the January run up that took place. When it had originally squeezed, January hit its peak price on January 27th, right when the buy button got turned off on this stock and others. Um, and all of a sudden, there was only selling in a single direction. There was no buying possible. What that resulted in was a complete imbalance of the bid and ask. The bid basically became empty. That basically means the stock can only go down. It's not possible to take the stock in an upward direction if the buy button's been turned off completely. And it happened across multiple brokerages. This completely threw any chance of any buyers taking a new position or competing for the price or creating any price discovery from making any putting up any resistance to the downward pressure. And ergo, the stock cratered. It completely crashed, and the price fell all the way down here. But look at how small of a movement that the OBV made. It actually stayed perfectly even between January 27th and the deepest uh, valley of that sell off. So here at the top, the OBV is 2.5 billion, and at the bottom, it's 2.1 billion. The OBV down here at the lowest point was negative 249 million shares on balance. Now, a negative number isn't like an indicator of fraud or anything like that. It just means that there's been more selling on balance than buying on balance. But look at the difference. The price moved by $20, and it took roughly a balance of 2.5, basically 2.7, yeah, 2.75 billion shares in buying pressure overall when you add all the volume candles up in order to make that happen. And then throughout all the remainder of this movement all the way down here, the buying and the selling pressure was almost equal. The number of shares, I should say, that were being bought versus sold were basically equal. No difference. It took far fewer shares being sold to move the price down that far. That's what that essentially translates to. And as you notice, moving in an upward direction, it's still not really moving the OBV here either. And that's because algorithms are pushing the price around. For the most part, retail is just buying or holding their positions and not really making any moves. And this whole movement that took place during January all the way through till current day, but the OBV just doesn't move. It's incredible. It's basically a perfect indication that neither buying nor selling is being done by retail traders. It's just not moving. And the buying and selling is almost equal. And at the very end of that, when that wedge finally completed its downtrend, we saw an incredible thing. And I believe I called this back out on May 25th, I want to say was the date that I called out AMC for that it was going to squeeze soon after this upward momentum because it had broken this wedge. But there were a few other metrics I had been staring at. As soon as I saw this, I knew that things were going to change, and we saw the OBV rising drastically. And that's because the volume had shifted. The volume turned to come in and flood into the stock, and suddenly we saw this all-time high of $72. And now we're seeing something just as incredible. AMC since that June squeeze, or gamma squeeze, I should say, it has sold off precipitously. But the on balance volume here today, 4.7 billion roughly. And at the top of its squeeze, it was only 5.1 billion. And it's interesting that right before AMC decided it was going to take off for its big squeeze, it had its largest dip and broke all of its previous support trends. If I were to draw this out, this was a previous triangle or bullish pennant that I had drawn back here. AMC broke drastically through this during the wedge. It made a fake out breakout here, but then fell far below it again and basically crushed the hopes and dreams of retail because we saw a low of $9.40. And then immediately after that, it took off again because the selling pressure couldn't be sustained. There just wasn't enough shares. There wasn't shares available to short, and the uh, the algorithms had shifted at that point. And now we see AMC dipping like this again. And I just find it interesting. This is the second time that the OBV has done this, and now I'm waiting to see the volume start to ramp up here and take off. So I'll go back to Progenity here so that we can take a second look at this. Progenity's had its deepest sell-off, and it's coming off of the top of this this big expanding megafoam pattern. Don't get me wrong, I'm not happy about this drop. But after looking at all of these metrics and seeing how far of a fall it's been, I do see it turning around very soon, especially if retail keeps its head, stays cool, and just continues to hold the stock. Because despite what the price is doing, if institutions aren't able to scoop up those shares from people that are willing to give them up at a loss, then this doesn't net them anything. All of this movement is in order to generate a psychological knee-jerk reaction from retailers. The reason being is that institutions are constantly accumulating these shares. That's what this OBV trend means. It shows accumulation. If the OBV is rising, it's showing that there's more buying going on than selling. And if the price diverges from the OBV, it's a bullish signal. If the OBV is rising, but the price is dropping, that just means it's a discount, and it's a temporary move. Hence why I continued adding to my position today when it hit its lowest point yet. I'm just going to illustrate a couple more stocks where I've seen this happening. BB stock had a huge plateau on the OBV back here when it was in the negatives. It rose up by about 500 million at its peak and sold off drastically, and then made another run in January before, along with the other meme stocks that were being traded, such as Gamestop and AMC. It plateaued again during this sell-off, and then it squeezed for a second time, and now it's selling off again. As you see, the OBV hasn't moved. After these huge dips, they swing upward drastically. It's almost incredible how predictable it becomes. And every single time, it's after the MACD shows it's just at the absolute worst conditions, and then it'll turn around in a single day, maybe in about 3 days, and it just comes in out of nowhere. The OBV and the MACD tell you everything you need to know about when there's going to be a turn. Let's take another look at MMAT. MMAT is doing the same thing. MMAT, when they merged with Torchlight, had a little bit of a squeeze here, and it sold off pretty badly, but the OBV stayed about middle from where it had started, despite the price dropping back to previous lows. And even here, the OBV continued rising in this small accumulation that took place here. And even as it's selling off, the OBV really isn't dropping to match it. The price here between August 23rd and today, the price is scarcely any different. Let's take a look at this trend. This is a 15% difference in price. With a $200 million difference in the OBV. So this is bullish divergence in the OBV right here. Progenity, price is dropping drastically. MACD is down really bad, but as soon as the MACD turns and the signal line starts to continues falling while the MACD rises, we're going to see a cross somewhere around the $2.80 mark. And then suddenly the stock will be running again. AMC, you got the same story. MACD looks really bad. Huge sell-off. OBV hasn't moved. It's not going anywhere. It's staying exactly where it was at the height of its squeeze at $72. Price is now down to like, what is this? It's like a 60% loss. OBV hasn't moved. MACD is in a bearish pattern. Wait for this thing to turn. Suddenly the stock is going to run again. Don't know how much, but I guarantee it's not going to stay down here for very long. This is not a sell-off. The OBV is diverging. It's staying flat while the price is just cratering. It's not going to last. Let's take a look at Gamestop for everybody else. Here's a fun one. Gamestop at the height of its squeeze, $483, down from, geez, just a couple weeks before it closed at $18. OBV rose by a little over $1 billion. It's been flat ever since, despite all this crazy swinging, zigzagging pattern and this massive sell-off that we're seeing right now. OBV hasn't moved. It's been just perfectly flat. Again, don't give any credence to what these algorithms are doing. They're trying to incite a fear response in people. As soon as you give in to that fear response, you've already lost. Basically, what I'm saying is that if you're becoming emotional with your trades and you see the price dropping, you need to actually confirm that the price dropping is because of something that is natural or synthetic. And right here, all of this selling pressure shows me that it's all synthetic. I can cite any other stock that's trading on the SPY or in the NASDAQ exchange or on the Dow, and I'm positive that the OBV will be following the price. Let's look at Amazon. Oh, that's amazing. OBV moves perfectly with Amazon every single time. Let's look at Tesla. OBV moves more or less with it. They're pretty shallow swings because the share price is very high and the stock's float has dropped, so the volume isn't very pronounced, but it still moves more or less in trend. This is a good point to look at it. This was before they did their stock split. Who else can we look at? Let's look at Bank of America. Bank of America, COVID sell-off, OBVs dropping out. Zigzag patterns are perfectly in line with the OBV. Everything is moving all the same. Even the OBV is curling here with this massive buy up and then sell off. It's a shallow one, but it's still moving in trend. Apple stock. COVID sell off. Drops like crazy. Slow rise in price. OBV's tracking perfectly. Absolutely no difference. It's in perfect trend. So I promise, if you look at a stock that's got a diverging OBV, it's going to be a squeeze play. It's going to be some kind of a squeeze play or some kind of meme stock because it's being played with and algorithms are targeting retail. This is what this is what gets me so pissed off. I get so pissed off because retail doesn't understand what these things mean. Guarantee you 90% of retail traders that watch any of my videos or talk with people in Discord, um, most people that watch streams like Jason Pollan and Matt Kors, who I'm you know I enjoy talking to these guys. I really like their technical analysis, but neither one of them had really ever given much thought into the OBV before I brought it up to them. Most traders don't recognize this kind of thing. And what frustrates me is that when you have access to this data, when you can actually see these things happening in real time and you understand what they mean, it gives you such confidence. But the thing is that this knowledge is kept barred and gate kept from retail, and it's been that way for decades, really since the beginning of the stock market. All of this information has been kept intentionally out of the hands of your average Joes, and it's such bullshit. I can't even begin to describe my rage at just how pompous and how entitled Wall Street brokers, market makers, and all of these fintech assholes treat average retailers. It's such bullshit. They have access to tools, data, and decades of knowledge, not to mention technology that we can't even fathom, operating with millions of trades happening in microseconds. And they laugh at us and they treat us like we're a bunch of stupid Neanderthals that can't figure out how to add two and two together. I can look at this and I can easily see that there's some shady shit happening. But the SEC doesn't even give it a fucking thought. They won't even look once. I'm sorry. This shit is like 2008 all over again. But this time, instead of just weaponized incompetence, it's weaponized ignorance. Nobody wants to look at it. Nobody wants to actually pay attention. Before, I could say that the banks are just a bunch of idiots that don't understand the risk of the trades that they're making, and then they made everybody in the average populace, the 99%, hold the bag because of their fucking irresponsibility. But now they're weaponizing the trading system against retail investors to teach us a fucking lesson. We pissed in their Cheerios and they're all mad because we figured out how to open up a trading terminal and read some goddamn charts. And suddenly we become a problem. I at least have been able to figure out this much while I've been trading these so called degenerate meme stocks, gambling away my life savings. It's that if enough people believe that a company is worth something, that as long as enough people agree, it will trade at that price. And it doesn't matter what you do to screw with the stock. When enough people agree that something should be trading at a specific price, it will go there. This is not what Progenity is worth. AMC's not worth $29. GameStop's not worth $179. I don't care what you say about fundamentals. I don't care what you say about my trading strategies. But that's not what these things are worth. They're worth a lot more. And somebody on Wall Street knows something. But now they've gone and turned their technology against us because we decided to get in the middle of it. And because we're a barrier to their success and their paychecks, suddenly we have to be thrown out of the way. So they're going to try and throw us under the bus. And as long as I'm still here, holding on to my shares and being a thorn in their fucking side, they're going to continue bleeding themselves dry, trying to drive the price down, trying to convince me to take a sale, take the loss, take my hits, learn my lesson, and hang my head in shame and walk away from the stock market penniless. Or I can buy up every share that they throw at me, take everything that they've got, and leave them with a net short position that causes them to bleed themselves dry. That's the thing about fraud in the markets. As soon as it gets found, as soon as it gets caught, it falls apart instantaneously. Retail traders caught Wall Street playing games, plain and simple. Now, this is the way that I find whenever fraud's going on a stock ticker that I'm trading. And you know what? It's worked. It's worked just about every time. If enough people decide to hold on to this stock, I guess that's really up to them. As always, none of this is financial advice. Everybody's responsible for their own decisions. I treat everybody as an adult, and I'm not telling anyone what to do. I'm just letting you know what will happen if enough people choose to buy and hold the stock, no matter how low it goes. It will cost the hedge funds and short sellers who are driving this price action and pushing it down to its lowest levels. If you actually purchase those shares off of them and you take them out of circulation so that the algorithms can't buy them back and accumulate them at discounts, then you cost them an unfathomable amount of money. It costs them tremendous amounts of money to borrow these stocks, to continuously lend them out, and to continuously take these borrow fees and continue to sell and sell and sell in an effort to try to drive the price down. If enough retail traders were to buy this up at the current price, we've currently experienced 40 million in volume just on the day. If we saw that same level that we saw back on October 11th at 200 million, we would overtake the entire trading week worth of volume in a single day. And that would be enough to drive the stock straight back up past $7 from where we're currently sitting at. Now, yeah, obviously take this with a grain of salt. Don't just take my word for it. This is something that everybody should do their own research on and understand exactly what these metrics mean and how to read these charts and to understand the market mechanics. Everyone has to take that upon themselves. Um, and I'm obviously just an amateur trader, so I don't know everything. I certainly haven't been trading in the market long enough to understand all of the nuances and all the ins and outs and all the indicators or patterns. But at least with the tickers that I've traded, and at least with my recent experience, I have seen consistently what happens when retailers decide to ignore common logic and ignore the fear response and buy regardless of how badly their portfolios may be bleeding and how badly the stock may be selling off. When retail just decides, I don't care, I just like the stock, hedge funds lose money and they lose big time. So, like I said, I'm not a financial advisor. None of this is financial advice. I'm just letting you know what I'm doing and what I think is going to happen. Just based on an unprofessional amateur retail degenerate, uh, a retail degenerate's experience. Sorry for the tough trading week. I know that this has been rough to watch, but just know that I'm still going to be maintaining my positions. I'm currently still in a buying pattern, and while I don't think that this sell-off is quite over yet, just based on the MACD, I do feel like consolidation and a turnaround are going to be coming soon. So hang tough and try not to let it get to you. These things happen. The market's currently just having a really bad time between the COVID scare and talk of inflation. That's definitely one of the big catalysts for why we saw this huge sell-off. Just try to remind yourself that there's a reason for everything, and there wouldn't be a reason for the OBV to stay this high unless hedge funds had a reason to hold on to their stock, no matter what the price was. And if you're seeing this kind of a sell off while the OBV is this high, it tells you that there's a reason for hanging on to it. And I'm going to listen to that. That pretty much ties up my stock market update for the day. The one other thing that I wanted to mention before we end the video here is that I those of you following me on Twitter probably already saw that I am going to create a Discord community. It's actually currently under construction and is in the works. I have a wonderful mod team that I'm so thankful just kind of rose up and volunteered to join me in on this. And I I first want to say thanks to all of them. I'm so overwhelmingly grateful that all of you guys just suddenly decided that you were all in on this idea of starting up a separate community just to help just to help people understand the markets and to share tools and tips and tricks and resources in trading, and not to mention sharing research. All of the research that I do, I've been offering up freely, and I'm planning on continuing to do that. But I'm just one guy, so it's extremely difficult for me to keep up with all of the requests for looking up tickers and doing research on this stock or the other, verifying what's a good squeeze play versus what's just a pump and dump. It all takes a lot of work, and it's extremely difficult to keep up with. So that's one of the main reasons why I wanted to start up this Discord community. Um, there there is going to be a barrier to entry of like a really small membership fee, and I already have been getting all kinds of people just screaming at me like nuts, saying that I'm going back on my morals and that I'm suddenly going to start taking payments for everything. That's not the case. Um, the server is just it'll cost a little bit of money to maintain, and also the primary purpose is because by tying someone's credit card to a account, it prevents a little bit of just random bots and spam and stuff from coming into that server. Every free server that I've ever been in has just been a chaotic mess, and I don't want that to end up happening. I want it to be a place where everybody can openly share ideas freely with each other and not be afraid of their opinions being uh, used against them or blown out of proportion or anything like that. And I want to be able to give everybody access to tools and knowledge and research that me and other like-minded investors do for free, just to share with everybody what they know. So pretty much the only purpose is just to prevent a random bot from being able to join a public community and then just crush it with spammy posts. I also want to address that the fact that I'm now actually getting threats, which is something I didn't expect to happen so quickly. But now I'm being threatened with doxing and swatting and things like that. Um, so yeah, that's the thing that's going on. I guess I'm more shocked than anything that I, as a person who's been giving out free information that everybody asked me to give, um, are now feeling so threatened as to start to threaten me personally. Um, I honestly, I'm flattered. I'm flattered that I'm that important and that much of a thorn in your side that you're going to go to the lengths of trying to find me so that you can send the police to kick in my door. Um, by the way, I'm still here, so I'm waiting. All that aside, I don't plan on going anywhere. I'm going to continue offering up my opinion to anybody who asks of it. I'm perfectly happy to hold discussions and chat with anybody who is interested in talking about the stock market or manipulation or what's going on in the world, Wall Street, or anything like that. Um, I really could not care less what people think of me as as a social media influencer, stock trader, or anything like that. I am simply interested in doing what I want to do, and I trade stocks for fun. And enough people asked me to offer up my opinion that I felt it was easier to do it through a Discord community and a YouTube channel. And that's really the only reason behind any of these changes. And if you have a problem with me personally, or you have a problem with how I have decided to present my information, if you have a problem with my strategies, I don't really care. I frankly couldn't give less than a shit. You are able to, you are free to draw whatever opinions you like about me. It doesn't affect me one bit. I don't make money doing this. I make money with a day job. I, I, I am, I have my own source of income. I don't need to be doing this. I simply do it because I choose to, because I am a human being who enjoys doing what it is that he likes to do. If I like to trade stocks, that is my business. If I wanted to trade beanie babies and put a YouTube channel out about it, then I would do that too. I don't really care what people think of me, and I don't really care if you follow me or drop off. As far as I am concerned, that is your decision, and if you don't like me, that's your problem, and you're either going to have to get over it or die mad. It is that simple to me. So, all that aside, I look forward to inviting everybody who is interested in sharing their opinions, sharing a friendly discussion about what's going on in the stock market and how we can stick it to these pompous Wall Streeter assholes by showing them what retail degenerates can do with a little bit of research and a trading terminal. That's all I got for you guys today. I look forward to seeing you in the brand new Discord. Details on how to join that will follow very shortly, but please, I ask for your patience as we continue getting that set up. Thanks very much for watching, and have an awesome night.